Hello, I'm Mitch Goldberg. Thank you for joining me. This is my live stream called Be the Boss of Your Money, where we talk about personal finance, investing, business strategy, and so many other related topics. Thursdays, I like to do a little bit of a wrap up on Thursdays because there's been a lot of news. It's a good day to catch up on the week's news, on the events, personal finance, whatever is new that we need to cover that we may have either not spent enough time on or something of importance. Today's a particularly important day. Why? Because of the news this week. Yesterday we had impeachment. We had impeachment number 2 for President Trump, and tonight President-elect Biden is outlining a massive stimulus plan. We think he's going to go big. We think it's going to be on the magnitude of something like $2 trillion, maybe even more. People are going to get a lot of money. This is that one last burst to get the economy through the pandemic before we really start to see the vaccines start to ramp up and we start getting back to some kind of new normal. That's really the big news. But today I also want to focus on something small, and that is small cap stocks, which means we also have to talk about large cap, mid cap stocks and understand that, this is a big part of investing, understanding the difference that not all stocks are equal, are the same. All right. So let's just roll the introduction like we do every day. This will be a very brief intro. We're going to get into this. It's about investor education, personal finance. Here we go. All right, we are back. Thank you so much for joining me. I'm Mitch Goldberg, your host. You're watching my live stream. I call it Be the Boss of Your Money. I love doing this. It's all about really financial education. That's what we do here. A big part of my job, of my career, is financial education. So that's what we do. That's the focus. And I feel that the more of an educator I could be, I feel clients are better off. You're better off. It's good for business, but more importantly, it's got to be good for you. So that's what this show's all about. And you know what? If you are sitting on some accounts, an account somewhere that's not doing anything, that you're just kind of worried about it, or you want to do something with it, but you forget about it, that could be a good place for us to start. We do a review. You get to see my process upfront and personal, how I assess the risk of the portfolio, of your risk. We go into planning and we decide what to do, what needs to be done. And a small account with you that you just maybe have an old IRA sitting around somewhere, that could be a good place to start for you and me if you're considering looking for a new financial advisor. So I just want to get that out of the way. And I also want to say thank you for your time. Your time is valuable. It is precious. And I greatly appreciate that you chose to spend some of it with me. And every day I want to do my absolute best to make sure that I deliver some value to you. This week we spoke about Bitcoin. We spoke about where I see value, financials, and energy stocks. And we spoke certainly about the news that's taken place since last Wednesday in the Capitol. We have just a matter of days, into less than a week, until the inauguration. And everybody is sort of waiting for all hell to break loose between now and then. And I think the big surprise is if nothing happens. But the real news happens tonight. Joe Biden outlines his stimulus plans. He's going big. He's not going home. And it's supposed to be something that's gargantuan. Now, does he get it through Congress? Does it actually become law? That is an entirely different story. And yesterday, this ties into it. We spoke about tax increases. How would tax increases affect the stock market? If you missed this, check it out, yesterday's live stream. I'll give you the quick sum now. Since 1950, there have been 20 some odd times that taxes have been increased. And consistently, not every time, but almost every time, the stock market has reacted well. The stock market has gone up. And the two times when all three tax categories were raised, personal, corporate, and capital gains, the stock market had a very, very good run. So tax increases don't happen in a bubble. Tax increases happen with lots of other economic levers being pushed and pulled at the same time. And what's important to know is, I said yesterday, maybe I'll get some hate mail if I say this again, but tax and spend Democrats. Well, here's the thing. Democrats will spend, but they'll typically, they'll raise taxes. So they're paying for the spending, or at least some of it. And what happens is you get the growth, you get tax increases because people make more money, there's more sales tax receipts, there's just more of everything going around. And that has been good for the economy. The stock market is not just a matter of taxes. There's government spending, there's continued monetary stimulus from the Federal Reserve, currency fluctuations. There are so many things that affect the stock market. To think that, taxes up or down mean one thing or another for the stock market, it's not a realistic way to view the impact of taxes. Taxes don't work in a vacuum. So I will be writing something about this in a summary tomorrow in my weekly email blast. So I don't do a live stream on Fridays. I send out a weekly email blast. If you'd like to get on the list, there's no soliciting in it. It's just a really solid, I think, well-written email. And I get into things that people have questions about. And sometimes they're a little quirky, a little unique. And I come from very different angles. And sometimes you even see that these angles become eventually major topics in the media. So let me know if you want to be on the list. You could send me a DM or hit me up in the comments with your email address, and I'll put you on the list. Okay, we've got somebody out there. Bill, it is good to see you, my man. Thank you very much for joining me. Always a pleasure. And I look out for you, Bill. I look for you in the live stream. I know, hey, man, who has time to watch Mitch every Monday through Thursday at 4:30, be the boss of your money? But I always appreciate you being around, and I really appreciate it. Nice to see you, too. If you have any questions, hit me up in the comments. If you're watching this in the replay, I want to hear your questions. Listen, your questions actually give me future material to go with for the live stream. So, and I enjoy that part, that interaction. So what else did we speak about last week? Energy, financials, Bitcoin. I spoke yesterday on a Zoom call about pot stocks and pot stock ETFs. And, I'm a believer in the pot story, that more and more legalization comes through the states. Eventually, marijuana will no longer be a Schedule I drug. It's right now, it's in the same category as heroin and cocaine. And I think most Americans feel that is a little overzealous, overbearing. It's not really where it should be. And I think we'll get more and more legalizations. And I think that is an emerging growth industry. Okay. So we talk about things like that here on the show. Yesterday, 2 days ago, we spoke about beneficiary designation. So the beneficiary designations on your, if you take a look at the beneficiary designations, I'm still here. I'm right here. You see, I'm doing multi-camera work now. You see that I'm switching the camera, trying to make the show a little more interesting, a little more visually appealing. So if you, beneficiary designations supersede that of a will. So if somebody passes away and they're married, but they had a previous spouse, for example, and their beneficiary designation on their 401k still has their first wife as the primary beneficiary, then the first wife will inherit that money. The second wife can't say, no, you guys got divorced. I'm the new wife. I should get it all. Too bad. It doesn't work. Doesn't matter what the will said. You could march into court with an army of lawyers. It won't work. Primary beneficiaries, contingent beneficiaries, you must update your beneficiary designations. And that's something that we spoke about a few days ago, and it sparked a lot of questions. So I'm glad I brought it up, because a lot of people They didn't realize it, that your beneficiary designation for your IRA, your insurance, your life insurance policies, they need to be updated when you have new children, if you want to leave your money to a trust, if you are in a second marriage, even if you're in a, you are newlywed. A lot of people, when they start investing in the corporate world for the first time, they usually put their parents or their siblings as your beneficiaries. But once you get married, you need to update your beneficiary designations to your new spouse. Otherwise, you're leaving the money to someone else, and that someone else might not be willing to give that money to your ex-spouse. So you have to really, it's not a big deal. It's just a piece of paper. Ask your financial advisor for the form. You fill it out, you sign it, you send it back, and boom, it's done. Okay, so that is something else that we spoke about. So now I want to get into the lead of what we were talking about, and that is small cap stocks. And I want to mention big cap, large cap, mid cap stocks. What's the difference, and why it's so important for diversification? So I'm right here. Okay, I'm doing that switching thing. So let's talk about that. Small cap stocks are typically, a few $1 billion valuation and lower. And I know you're thinking, well, if, a few $1 billion is a big deal. Okay. Okay. All right. Hold on. All right. I will add you to my email list. Hope that you didn't mind me popping that up into the screen. And it was only for a second, so I don't think anybody's going to pick that up with your email address. Okay. So I want to add you to the list. Thank you very much. We've got a few people out there. Tom is out there. Hey, Tom, nice to see you. Judy's out there giving me the heart. Small cap stocks, like the name implies, are smaller companies. These are often the companies that you might not have heard of. There are examples of small cap companies that you probably would have heard of. One small cap company was Dunkin' Donuts. It was a $4 billion market cap. They finally got taken over at maybe about an $8 to $10 billion market cap recently. But there's opportunity in small cap stocks. Besides, that was Dunkin' Donuts, but there's a lot of small cap names that maybe you did hear of, and there are a lot of companies that became smaller because their stock went down so much. But if you have small cap stocks, and let's say you have an ETF of small cap stocks, and you have an ETF of mid-sized companies, companies in the valuation of, let's say, $8 billion up to, let's say, $15, $20 billion. And then you have an ETF of large cap stocks, let's say like an S&P 500 index fund. All right. In that case, the nice thing about having all three is that you're not going to have overlap. You're not going to have the same stock in each portfolio. So think of it like this. If you bought three different, internet/technology/innovation ETFs or mutual funds, there's a good chance that they're all going to have Amazon and Alphabet, which is Google, just because they're such widely held names. And how could you have a technology or an innovation fund without those stocks? So you're not really getting diversification like that. And it's almost like buying the same mutual fund 3 different times, as opposed to buying 3 different mutual funds or 3 different exchange traded funds, ETFs. So small cap, mid cap, large cap, that is the difference. And when you start thinking in terms of, market cap stocks, market cap sizes, that's when that's when you start to really, let me see if I can say that better. And when you start to invest in terms of different market caps, small, medium, and large, that's when you start to realize the true benefits of diversification. Now, diversification is a very commonly used term, and everybody thinks they know what it means. Don't put all your eggs in one basket is how a lot of people describe it. The way I want to describe it is it's a strategy we use to mitigate downside so that your total return does not become overwhelmed by the worst performing investment you have. But it doesn't necessarily protect your overall portfolio from going down in a down market. And it is not a strategy for maximizing risk. It's not a strategy for maximizing return. So if you really want to be truly diversified, what you need to do is have small cap, mid cap, and large cap as an example. So if you have, for example, let's say you put $5,000 into 5 different stocks: DoorDash, Airbnb, Zoom, Tesla, and DocuSign. 5 home runs, 5 great stocks. But is that diversification? You could say, well, yeah, there are 5 different companies, five different companies, 5 different names. But they all pretty much trade the same. You can throw in others, maybe throw in, Peloton in there. And I mean, there's just so many names. Maybe, throw in Amazon and other work from home, stay at home stocks. The thing is, it's not that you bought 5 different things. It's almost like you bought the same thing 5 times, because if 1 or 2 go down, and people rotate money out of that particular sector, work from home, stay at home, they're all probably going to go down. So you're not really diversified. How about add an industrial stock, a consumer staples stock, a healthcare stock into the mix, and maybe a small company and a medium-sized company. And that's when you start to get the benefits of diversification. I hope this is making sense. If you have any questions about this, hit me up in the comments. Right now, hit me up in the comments. I'd love to answer the question. And then you could get into emerging market stocks, and you can get into foreign stocks of developed countries, like Europe and Japan. And then you could just get into, break it down even more, just, small cap Japanese stocks, for example. There's an ETF for that. There's an ETF like literally for every kind of investment that, I could think of. So, Father, I hope you're enjoying the sound of the new microphone. I'm still trying to get used to this microphone. You've got to really talk up close and personal. It's a dynamic mic, so it just captures the noise in front of you and keeps out a lot of the surrounding noise. Right now, I'm in a pretty quiet environment, but it is a little echoey, so I've got some soundproofing going on, or acoustic proofing, I should say. So let's take a quick look at the day's action, and then I will let you go. So the big news that we're expecting tonight at, I believe, 7 o'clock Eastern, Joe Biden is going to share with us, with the world, his strategy or his thoughts for a massive stimulus package. Everyone who makes under a certain amount of money is going to get cash, money to the states, money to probably airlines, to businesses. It's just, we're going to see what he puts in it, but hopefully there'll be everyone so that it can in fact get through Congress, because he's going to have a bear of a time getting anything through Congress. He's got 51 votes if every Democrat in the Senate votes with him for his policies, with Kamala Harris as the break-even as vice president. So he's going to have to probably pick up a couple of Republicans in anything he does, because there's always a risk that a Democratic senator doesn't vote with his policy. Like Joe Manchin from West Virginia said that he might not back the first version of Joe Biden's stimulus package, as an example. So you're going to have to get help from the other party. And that's probably a good thing when you have to start working across the aisle with the reasonable politicians. Okay. I want to stress that, because we have a lot going on, a lot of things going on in politics right now that we don't like. Okay. And I'm just going to leave it at that. All right. So let's take a look. The Dow, the S&P, the NASDAQ had very little. Today was basically such a flat, ho-hum, boring day. No fireworks, no giant up stock market, no giant down market, no really very little volatility. It's just a flat market. And I think investors just want to mark some time. We had a nice rally even since the destruction that went on in the Capitol with Trump supporters. So that was pretty bad, right? We actually hit new record highs that day, and it's continued through the next couple of days. But today it's just, I think there's a tired feel to the major averages, and that's about it. But you see this Russell 2000, Russ 2K, small cap stocks continue to rip higher, up 2% when everything else is pretty much flat. That's a pretty big thing. So small caps continue to do well. What are small cap stocks? Small cap stocks are companies, again, they're smaller, but Small cap companies are more sensitive to the vagaries of the economy. So when the U.S. economy does well, small caps are more subject to the domestic economy, so they would do even better. So an improvement in the economy, government spending, would have a magnified effect on the good fortunes of small companies, because they don't get their revenues and earnings predominantly overseas. Like large cap companies get a lot of their revenues and earnings from overseas. So smaller companies are typically more domestic focused in their revenues and earnings. So that's why they've been doing so well. And let's take a quick look at bonds. This is really a big deal. And this is, I think, this to me is actually the biggest financial story of the year. Is you see the 10-year, it went over 1% last week. And this morning and yesterday was down a little bit, and it was starting to creep down a little bit. And people are starting to think maybe the 10-year treasury will go below 1% again. And all of a sudden it reverses. And that is up a little bit at 1.129%. So that is the major story, in my opinion, of business news this year, is that the 10-year is above 1%. And I'm not feeling any love for that 10-year going below 1% right now. I'm just not seeing it. I think with all the stimulus and the money printing and an expected improvement in the economy second half of the year and an expected increase in inflation, it's I think the path of least resistance is for interest rates to go higher. All right. And let's take a look at oil. Oil continues to move a little higher, had a nice day today. Brent up a little bit. Okay, so oil is continuing to move up. Let's take a quick look. These are all based on expectations that the economy will do better and on Biden's stimulus package. All right, gold off a little bit. Funny thing with gold, I think people are using Bitcoin more as an inflation hedge than gold. Inflation has to do with getting less for the dollar, but it also has to do with dollar debasement, over printing in the money supply. You can't overprint Bitcoin. And I feel like a lot of people are using Bitcoin as a proxy for inflation. So when the dollar gets stronger, Bitcoin goes down a lot. When the dollar gets weaker, Bitcoin goes up a lot. It's a very magnified or a very leveraged way, it seems, to play inflation expectations. But silver and copper and platinum and palladium continue to move up. Overall, the entire commodities complex has been strengthening, and that's why a lot of people are expecting to see some inflation. Let's take a look at some of the industrials. Today was a great day for another very solid day for industrials. A lot of stocks up over 1% in the industrials. You keep going down. United Rentals, URI, that's been on a tear. Southwest Airlines was over 49 earlier today. FedEx moving up. Boeing moving up just a little bit more. The financials continue to rocket higher. And we spoke about this, right? I've been talking about financials for a long time. I still see pockets of a lot of value in financials overall. But I remember, Wells Fargo stock and Bank of America stock, 5-6 weeks ago, 8 weeks ago, were $25 a share. And I'm thinking, I bet you they'll both move, stay at the same price. They'll go to 26, 30 at the same time. And I was like, which one gets to 30 first? They both hit 30 at about the same time. And now Wells Fargo is almost 35. Bank of America is just about 34. And, financials are doing very, very well. So if you were patient, great. But if you listened to some of the talking heads and got out of financials, you are really missing out on a major part of the market. And FANG stocks continue to get hit. This is part of that sector rotation where people are moving money out of work from home, stay-at-home stocks, going into industrials, financials, energy. And then you take a look at one last one we'll take a look at, sector ETFs. Who won today? Energy was the best performing sector of the day. Real estate was up a little, financials and industrials. But energy, financials, and industrials, those are the sectors you want to see lead. That means investors are bullish on the economy. So let's just click that one by. And I'm going to wrap this up by saying, thank you very much for joining me. I really appreciate it. If you have any questions, again, hit me up in the comments. I will be back with the live stream next Monday. Unless something crazy happens in the stock market, I will be not live streaming until Monday. I don't stream on Fridays, just Monday through Thursdays enough. It takes a lot to do this every day. Okay. So you have yourself a good day. Thank you for your time. Have a great weekend. Talk to you soon.